Good day, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Wednesday evening, and we're at the 19th of January, 2022, about 7:45 p.m., a little later than normal, but I wanted all the markets to be open and running. I watched part of the president's 2-hour news conference, and my jaw dropped. I had to get it off my desk. He's again... What a difference between he and how President Trump was playing it. Forget the two men's personalities. It's the style that they run the office from. I am pretty sure of what I heard, and I'm waiting to see what the news all says. I think he gave Putin, President Putin of Russia, the go-ahead to invade a certain section of the Ukraine, and the U.S. might not throw the full force of sanctions at them if they did it. So why not invite them in? If I'm a NATO member, I'm going, are you out of your mind? You got to be saying they don't cross 1 inch. So I think the bills are spilled. I think that Russia is going into the Ukraine. I don't care what everybody else says. I think we have invited them in. Now, you can argue with me, but from what I heard, maybe I didn't hear right, that's how I interpreted that. Then the other thing we're dealing with is this big break in the stock market and the fact that the NASDAQ has gone down 10% from high to low on a closing basis now. That's important. But what does it really mean? So I cover that with a series of graphs in my full research report tonight. So I haven't sent it out. When I finish all this, I'll send it out tonight for my traders. In the past, there's a better bet than not that you get this first wave down, you get a 10% correction. It doesn't have to lead to a 20% bear market. And within a certain period of time, the market starts eking out. Now, it covers this report, what happens the first week after that occurs, the second, the third, 6 months out, a year out. I think you'd like to see it. If you don't have my research, you might want to go and sign up for it. It is free if you've not tried it before on our website under our free offers. Then we have the dollar fighting a major battle. And in the dollar, as you know, I did a special report on the dollar yesterday. It's only up on the website 3 days. So if you don't see it between now and Friday, you're out of luck because it just disappears and it doesn't come back. Take a look. We still are climbing on interest rates. It seems to be a foregone conclusion, at least on television, that we're going to 2% literally right away. And that the Fed is going to make its move, maybe up to 4 of them this year. Now the Bank of England appears to be on board to make moves, other central banks as well. So as that all goes on, it weighs to a degree on what the markets are going to do. But here's the psychology. The market is now building in all these rate hikes. So you're taking out multiples, and that's the key word. We had high PEs. It's taking those down to more palatable areas. Has our economy fallen apart? It has not. Will there be opportunities when this run ends to the downside? There will. Will these companies have pricing power? They will. Will the government be able to control inflation? Don't know. Will the Fed get too aggressive? Don't know. So there's plenty to deal with. And of course, you got the Russian situation in the Ukraine as well. When you look at the S&P on a basis of a Wednesday, tonight and Thursday, tomorrow's trade, we're now underneath the 18-week average. Bloomberg carried a story about getting underneath the 100. I went back and looked as to what happens, and that's why I ran this report for my clients tonight when that occurs. So while the NASDAQ has a 10% break, you're getting the key numbers here in the S&P. The trend is most certainly to the downside. You see that crystal clear with lower highs, lower lows. The market came after a break, fought at the couple of days at the 18-day average, went yesterday. I'm going to say yesterday being today, I'm recording on Wednesday, but Thursday's trade's already happening. And you drop down and challenge those lows. So where's the Bollinger Band? You're there. Now, if this doesn't hold the market over the next 24 to 48 hours, the odds then shift to the market maybe wanting to move to the 200-day average in a further break. This is an important number, and you can't make your mind up on a day or two if the market's going to bounce away from that. Too difficult. It can play that game for a little while. But I do think if I'm a bear, Let's talk that. You catch this. I think the bears are covering shorts. I don't think they're adding to shorts. You're oversold. You're into that number. So let's flip it around if you were bearish. That's a short covering area. I am not a bottom picker. So not being a bottom picker, I'm looking to see what the other person might do, and that wouldn't surprise me at all. In the NASDAQ, you're at a number that I think is going to try to hold the market. Now you're down to the 200-day average. Okay, that's an important number with the Bollinger Band. If the market can't hold it, do you go down another 3 to 5%? You could. There's no moving averages under you at that point. So this is a real important area that I'll be watching. There's nothing bullish about it. And I'm going to repeat, I'm not a bottom picker, but as a short, I'd want to be covering shorts and take my position down dramatically or if not out of it. In the Dow, same thing. I'm approaching the zone now where it tried and it did stall at the 100-day average in the Bollinger Band, starting to give ground on the close today. I think at the 200-day, between there and where we're at right now, the pros are going to be lifting shorts, and you're oversold as can be. So it is not a story to add more shorts. It's a question, if you were betting on the downside, are you taking money off the table or not? The Russell is the weakest, and there's no support to speak of under this market. This is a market that's just in a free fall, so to speak. It's out of vogue. It's trying to break out to the downside. Unlike the other averages, it's got nothing under there. It's the first that it even tried to embed. If you look, both numbers did not close on Wednesday under 20. So you're just in an oversold condition. And in the VIX, as I said, the first challenge of the upper Bollinger Band that the pros often write calls at has a history of the market giving them a little bit of hell. How's that to begin with? But in the past, and that's going to be what we look, is it the same pattern? In the past, it has come back in quick order and rewarded those traders. If it doesn't do it by Friday, there's a problem in the market, and maybe it just is going to run on them. Got to be careful here. What changed? You don't have the Fed in your back. You got the Fed as your enemy. They're going to raise rates. They're going to do something with the balance sheet. They are doing their QE accelerated. They're not there supporting the market right now. They're fighting the inflation scenario. That is the difference in all these other times. That is not what we had. We had the Fed supporting the market in terms of QE, if you want to call it that. Now they're tapering that all back. They're going to put their foot on the brake to a degree, and that scares the market at first. Markets adjust, but you deal on these markets a day at a time, and don't forget that. When we look at the bond market, I still have a pattern where it's basically lower highs, lower lows. We had a bounce here, and as you can see, this is where this market got into trouble. You had an outside day up. You took out the low of an outside day. My rule of thumb, and that's what it is that now until you take out that day's high, the high of the outside day, the market often makes a run at the closest moving average or the lower Bollinger Band. And you tell me what it's been trying to do. That's it. Plus it re-embedded. So this is a pretty still bearish situation that hasn't changed itself. You did the job and you got to the Bollinger Band in the 10-year. It's the same pattern. See that? That's a trap pattern. If you take out that low, you normally don't do that. And when you do it, watch out. And I was telling my subscribers, my paid subscribers, watch out. That's where it could go. And lo and behold, it's exactly what the market did. In the dollar index, now if you get back over 95.81, suddenly I will be this guy. I'm bullish. Right now, I'm the hide guy. No, I'm not. I'm in the bear camp right now. And that's the resistance point, the line in the sand. Target, if the market wants to drop, 94.77 to 94.74. That'll be the zone that I'm targeting. Eurocurrency's done this. It's stuttering. It's going, well, should I be bullish or bearish? Which way is the dollar going to go? And that's where it's caught. It's trying to stay bullish by fighting it to stay over the 18-day average, but it adds another down leg if it gets under 113.28. Barring that, the bulls are probably nibbling here with fairly tight stops to see can it do anything. Their negative is momentum hasn't yet turned the corner for them. In the British pound, I am still looking for a retracement back to these numbers. I watched with fabulous glee today as I was watching the fun of Parliament TV. Have you ever turned it on to see Boris Johnson and how the House of Commons goes? If you haven't, it's called Parliament TV, and it's parliament.tv, and they'll show you the times and what's happening, and it's live. Wow, is it different? But this poor guy is under an awful lot. I don't know if he'll survive. You need, I think, 54 signatures of MPs, members of the parliament, to give a letter of no confidence in him. And if that happens, then no confidence vote can take place, and he could be out of power. And there's over 20 that I've read about that they are saying they're turning him in already. In Bitcoin, you're still coming down. You're down another 135. You're oversold. You lost the embedded reading back here. And normally you get up and you make a run to the 18-day average. This has been a bit of disappointment. It's a sign of now a lot of weakness. And you're going to ask me why, if you were sitting next to me. And here's why. What's really happening is to get to this number, the number's falling. Price is pretty stable. That's a bearish sign. So we can get to that number and then sink again. This is not a good sign that I'm seeing on that chart. The differential continues to narrow in between Brent and WTI. As you can see, you hit that band, you're still embedded. I look on these breaks for the traders to buy. Now, I think it was the IEA today said that in one of their reports, their monthly report, I think it was the IEA, that they look for the market to go into a surplus situation, I think early 2022 now. Well, it could happen. Will that hurt the market? I don't know. What happens if Russia turns off oil as it retaliates against NATO and the U.S. and everybody for invading? You know, maybe not the U.S., but other people. I don't know, after hearing President Biden. But would that be bullish? Could be, because they're a swing producer. Do they need the money real bad? They certainly do, and that's why the market also went up today, because supply becomes a question. Wheat took off. They're one of the major wheat producers, as you know, in the world, and exporter. So there's a lot of things there that have to be looked at. I would say this Friday, if things don't come out good, Biden's got to flip his coin and decide, do I go? Because the weather's right where it should be with the frozen ground for heavy tanks to move in. Higher low, higher high. You can see where the market's at. I think the pros are buying all these breaks right now under the Bollinger Band as you drop away from it. Same in the heating oil, not in nat gas. Nat gas has slipped right back to the 18-day average. It doesn't know what it wants to be right here. It's got a lot of problems. I don't think going anywhere at this point in time. You stepped out of that uptrend. Now, as I said, I did my special currency report. So this is the first one of the year. And I wanted to center on the U.S. dollar because as it goes, so go emerging markets, so goes other currency plays. You got to always pay attention to that. I didn't do a price count because the price counts have open numbers to the upside and downside. When you get that, it means the market's sort of out of equilibrium. It's trying to figure out which one is the next move. And I cover that in detail by looking at the seasonality, the weekly, the monthly, and the daily charts. To see this, all you need to do is go to our website under Market Research. You can also click up here at any time, move your cursor, an icon will come out there, click on it, it'll take you right to where you have to be. I'm Ira. Hope to see you, and I hope you watch me tomorrow on Fox Business, barring bad weather or something stopping that. I'll see you then.